everybody. We are back with Ag Marketing IQ in depth, and today our guest is Brian Basting from Advanced Trading. And thank you so much for being here, Brian. We appreciate you jumping in on a WASD day.
Thanks for having me, Pam. Always good to talk about the markets.
Well, the markets aren't all that fun to talk about today. You want to give us the high overview of what we're seeing?
Well, we certainly had a divergence, Pam, between corn and bean trends today. What the USDA surprised us most with today, most people were expecting higher yields than what we saw with the trend yields, of course, utilized in the last WASD report. But the USDA not only increased the yield for corn today, they increased the harvested acreage by about almost 2 million acres. Basically, they went back and took a look at the FSA data as well as some other data and determined that there's 2 million more corn acres, and of that harvested about 1.9 million more. On the other hand, the soybean acreage, Pam, went the other direction. It declined by about 2 to 2.5 million acres on both planted and harvested. So what we got was a divergence with the corn yield going up and acreage going up. We got a big increase way above trade expectations in the corn production. 16.7 billion bushels will be a record. Corn by far, corn production by far. And we saw the corn carryout increase from 1.66 billion bushels there in July to 2.117 here in August. So about a 450 million bushel increase in the carryout. And the corn market was under pressure from that moment on, from 11 o'clock on today. And the market's trying to digest, these new numbers, particularly the acreage numbers was a real shocker. At the other end of the spectrum, the bean carryout actually basically stabilized around 300 million bushel. I think it went down to 290 today with the small changes they made in the old crop carryout. And the crop ended up then being smaller today with that 2 million acre reduction for 2025 on beans, even though the yield was higher. So what we got there was a 21, 22, 23 cent rally in bean prices, whereas corn was down about 13 or 14 cents. So quite a divergence and quite a surprise here at the August report.
Absolutely. And so, looking at it, the trade was looking at a 3 or 4 bushel increase on the average yield for corn. And historically, that's what we've seen at the highest is 3 or 4 bushels. I mean, I know we did the drones. I know we did the surveys. Any reason to question, the foundation for this decision? Anything that you guys are going, I think that's a little off?
There's certainly some chapters, if you will, yet to be written in this 2025 story, Pam. I think we're in a grain fill period now with the vast majority, probably 95% of the corn now nationwide pollinated, but that doesn't necessarily make the final yield. I think we've got some variables yet. We've got any disease issues that could surface here the next 30 to 45 days before we really get into hard to harvest. And of course, we've got grain fill, and that's going to influence test weight. The ideal grain fill environment would be cooler temperatures at night, especially than what we've seen. We're being consistently in the low 70s here at nighttime temperatures. There is a camp, I'm not saying I'm subscribing to that camp, but there's a camp that believes that we are not getting the ideal finish to the growing season for corn. And perhaps, underlying perhaps, not a prediction, but perhaps this might be the highest yield of the year. There's another camp that says the genetics today are superior to what they were even a year, 2, 3 years ago, and the crop can withstand those warmer temperatures, and we're still going to see, these high 180s and maybe even higher. So there's a big question mark yet by that yield number, Pam. I think we have to accept the harvested acres now as a given. I don't think we're going to see big changes there moving forward necessarily, but I think that yield number is still a moving target, and we're still, deciding that final yield number, which, as you know, and your viewers know, is a big component to that production number. So I think there is room for uncertainty. There's room for volatility. I think as producers, you want to embrace that volatility moving forward and accept that we're in a new environment here. Moving forward, an environment that we're going to have to see if these lower prices will stimulate some demand.
Absolutely. You don't count your chickens before they hatch. You don't count your corn till it's in the bin, right?
Yeah, you said that well.
But looking at putting it in the bin, what about these farmers who are looking at a big crop and they don't have, necessarily all the storage they need on farm? Is it advisable from an economic standpoint to play the game a little bit, wait a little bit, see if you can get better basis, wait a little bit, see if you can get better price? How did they do that?
There's several components to that question, Pam. I think anytime you're looking at the large crops that we got pretty good carry in the futures market
Mhm.
at the moment. For example, the carry from September futures to March, beg your pardon, December corn futures,
Mhm.
September to December is about 22 to 23 cents. That's encouraging a producer to keep the grain away from the market, particularly if you have on-farm storage. Now, I would emphasize that you still want to have a floor underneath those bushels. You can do that a variety of ways. One way that you may want to consider would be the purchase of a put option that gives yourself a floor underneath those bushels, but leaves the upside open in case this is at or near the low. Again, not a price prediction, but that's one way to take advantage of that carry in the market, is that you are able to lock in a floor. Perhaps you want to go out and buy a December put option in that example. But regardless, the market has encouraged you to keep the corn off the market. If you're looking at not having that, as you said, enough on-farm storage, and you have to haul the corn to town, as it were, and move it across the scales, perhaps even for cash flow, we still would advise re-owning that crop to have that flexibility in the market, to have upside potential. And by one way you could do that would be to sell the grain if your basis isn't too weak, and then simultaneously purchase a call option. We'd probably want to go out, Pam, in early 26 with that call option, probably March, to get a full look at our harvest results here in the U.S. and the early results of the South American planting and growing season. So that would be one way to, again, set up floor underneath the market, leave the upside open. If risk management positions in this case, Pam, are already in place, for example, if a grower has put options in place and is rolling down those put options, I'd encourage that grower to maintain a disciplined strategy and avoid trying to pick the low in the market. That's a dangerous game. The market can surprise us, as it did today, on any given day. So you want to maintain a disciplined marketing strategy. One final thought I'd add to that, Pam, is a lot of folks have purchased crop insurance earlier this year for 2025 production, whether it be 85% coverage all the way down to 85, 80, 75%, whatever the case may be. But for example, if you bought 85% insurance on corn with a base price at 470, effectively on your APH, you'd have a base floor for December futures at just under $4, which is a hair above where the market closed today. The caution there, Pam, I'd want to remind your viewers, is that that only covers your APH bushels. Let's say you're a grower who your APH is 200 bushels, and this ends up being a record crop. Say you raise 230 bushels. Those 30 bushels are not covered by that crop insurance, those extra 30 bushels. So we'd encourage growers to, if they got a pretty good handle on their yield and think they do have a crop that's larger than their APH, to get those bushels covered too. But several things to consider there: carry in the futures market,
Mhm.
options as a strategy to give yourself flexibility, and also recognizing that your crop may be above your APH this year.
Well, and when we're looking at that, so we're talking about storage, we've also got to look at, do you have a production loan? I mean, there are some things that are particular to the individual farmer that they need to be looking at. Do we ever have a blanket answer for a farmer? I mean, every
No.
operation is a little different. So,
Yeah, a great point. The short answer is no, we don't. We can just give you some ideas, and you really need a trusted risk management advisor to work with one-on-one, who knows your operation, knows your constraints, knows your opportunities, and knows what your cash flow needs are, for example. So no, there's no one blanket statement at this point. I think we can all customize a strategy based on individual circumstances, but you do need to work closely in that example with a trusted risk management advisor, someone who knows what you're dealing with.
yeah, and I think here what you're talking about is, we can't create $5 corn out of this, but we can. They do have some options to be a little bit of a price maker to improve their price opportunity and look at what works best for their operation.
Yeah, well summarized. We can't turn back the hands of time. Of course, all of us would like to sell a December futures to 450 or even 475, where it was several months ago. But that ship has sailed. We work with what we have today. We start to look at our variables, including our on-farm capacity, our cash flow needs, our actual crop, if it's going to be above our APH. That's all we can
Mhm.
do at this point. And I think what we want to do, what we may want to make sure we avoid doing, I should say, Pam, is avoid painting ourselves as a grower into a corner. And by that, I mean have some type of not an unconventional, if you will, marketing strategy that's not conservative, that tries to make up for lack of a better phrase, some missed opportunities. That can
Yeah,
make a tough situation much worse. So I just encourage your viewers to remain conservative, remain attuned to what your operations needs are, and again, avoid painting yourself into a corner with some type of unconventional strategy.
absolutely. And while farmers are worried about looking at these low prices on corn, they may be hoping to make up for it with high prices on soybean. We didn't see the market react as much as we might have to the news today. And I would guess that has a lot to do with waiting to see what's going to happen in South America with their crop, because word is they've got a bumper crop too.
I think anytime you talk about soybeans, we have to talk about South America. And right now, South America is in full swing of supplying the world, specifically Brazil,
Mhm.
with exports. China's buying all their bean needs at the moment, literally from Brazil. And that's a wild card, of course, in the whole soybean market is will we get a trade deal finalized? Of course, the
Mhm.
administration extended that deadline 90 days, as it were, to negotiate further into November for any trade deal with China. But China has not bought any 2025, 26 beans to this point. And last fall, they had a very strong program from the U.S.
Mhm.
So that's a wild card there on beans. It could certainly change the whole landscape on beans if we were to see some type of deal made here in the short term where
Mhm.
China would turn around. Eventually, Brazil is going to run out of beans from their record harvest that they're working through right now. But
Mhm.
in the meantime, the bean market is looking at some constructive demand, constructive supply fundamentals from the report today. But the demand is a question mark. We can probably meet or exceed that export forecast in today's supply demand report if we were to get the China program up and going here with some type of trade deal. There's no question that China is going to buy some U.S. beans. They'll need to at some point, but they could really get that change that landscape in a hurry. But the bean market is being constrained also by the fact that any type of rally now in beans, let's say if we were to see a continued rally here, again, not a prediction, but if the market were to continue firm, that's just going to encourage more planting this fall, i.e. their planting season will begin in September in Brazil and basically continue through October, November. We'll basically begin in Argentina in October and continue in November. But if we were to see a rebound in bean prices, that would encourage them to grow more. But I think for the time being, the big variables in the bean market are twofold. Number one, are we going to see this yield be realized? There's been some scattered rainfall across the Midwest. Anytime you go west of the Mississippi River, tremendous volumes of rain, too
Mhm.
much in some cases,
Mhm.
but overall very good crop conditions. Minnesota, Iowa, Nebraska, Missouri, South Dakota. But you go east of the Mississippi River, been drier. We saw some crop conditions decline this week, for example, in Illinois. Conditions are not as good in Indiana, Ohio, Michigan
Mhm.
as they are in the West. So the bottom line is twofold. Number one, are we going to see the yield meet that expectation? The USDA gave us today, I think, 53.6 bushel
Mhm.
uh, to reach our 4.3 billion bushel crop. And number two, will we get a trade deal struck with China in particular to get these exports off to a great start? Because the new crop year starts in 3 weeks, a little over 3 weeks on September 1st, a little under 3 weeks now on September
Mhm.
1st. So it's going to be coming quickly. And so those are two variables. But for the time being, the balance sheet is much more constructive for strength in soybeans than it is for corn. It doesn't guarantee that this rally is going to continue, but I'd want to remain as flexible as possible as a producer, leave that upside open, but also maintain the flow underneath the market here at this time.
Absolutely. I think you hit all of the nails on the head. We're looking at some opportunities potentially. There's a lot of variables, a lot of unknowns. But I would say probably farmers need to get some sort of a plan, some sales in place prior to harvest, but leave their upside open in case some of those come to fruition in a way that gives them a couple more pennies on the bushels.
Yeah, you summarized that well. And there's also good carry, Pam, also in the bean market, but that carry could go away now that we've had a
Mhm.
constructive report. But for example, you look at the November futures out to March, a day or two ago is like 33, 34 cents,
Mhm.
which is an attractive carry, but that may go away if this strength continues and the or at least the nearby November firms relative to March. But regardless, I think you do want to remain disciplined. You want to avoid
Mhm.
price prediction. You want to avoid trying to pick a high, pick a low. and you want to manage price volatility, embrace price volatility, but manage it rather than try and predict it. Because, like I say, perfect example today, coming in today, who'd have predicted a 25-cent rally on beans and a 15-cent decline on corn with a big acreage, 2.5 million acres switch.
Yeah, no, it's definitely been a tough market. We appreciate your thoughts today. You gave farmers some things to look at, some ways to look at, getting a little more money for what they have ready in the field and what they harvest, and yet some realism when it comes to we need to maintain some discipline. We need to not wait for that pie in the sky pricing opportunity because it's probably not going to be there.
Just my final message there, Pam, and I don't want to beat a dead horse, but I do want to encourage viewers to none of us can turn back the clock to yesterday, much less 3-6 months ago when prices were higher. So we want to avoid now compounding a situation by trying some unconventional tools that are long shots, very long shots at best, and could really put your operation in much worse situation going forward. So let's work with what we can today here on August the 12th, move forward. And there will be opportunities down the road. We don't know when they'll occur, but we want to maintain that discipline and maintain that forward-looking approach rather than turn back the hands of time.
Absolutely. Thank you so much. And we appreciate your thoughts today. And we know that all we want is for farmers to get the most they can out of this crop. So
you bet. Great to be with you, Pam.
Thanks a lot, Brian.
You bet.